Welcome back to the YouTube channel. I got a question for you before you start off. What do you think Florida, the state of Florida, and California have in common? And I'm not talking about the crazy politics or unaffordability. What do they have in common? Let me know in the comments below. I'll give you a second. Okay, I'll tell you what they have in common. Insurance companies are pulling out of those states. We know that Florida is super unaffordable. I just saw a TikTok video today about a guy who opened up his renewal of his homeowner insurance. Wow, look at the dog. Do you see that dog? Oh my goodness. That dog would jump the fence. That dog would totally jump the fence. Okay, back to where I was. Okay, unaffordability. So, I gotta restart these videos. What does the state of Florida and the state of California have together? And it's not the crazy politic and not unaffordability. So, it is insurance companies are actually pulling out of the market at an alarming rate. I just saw a TikTok video today of a guy. He had to renew his homeowner's insurance, and his mortgage with that went up $1,000. Imagine that. He said it was like $300 before, and now it's like $1,200 because of the hurricanes and the insurance bailouts. So when your mortgage goes up $1,000 a month, you are not going to spend that money. That means if this happened to me, I'd be moving the state, because when you are that much in trouble with $1,000, that is $12,000 a year, and that is a lot of money that you basically toss down the drain unless something happens to you. You might or you might not use it. So when you look at the $1,000 that you're paying extra a month for Florida insurance, is you are in a very hard spot now, because you're probably not making $120,000 a year or $200,000 a year. No, you're probably making $60,000, $70,000 a year, as most people in the state of Florida. This is talking about average. And taking that much money out of your pocket will seriously impact the state, because then you have less money to go out to bars, boating, fishing, bars, restaurants. So it's going to affect everybody. And I wanted to make this video because even in California, State Farm is now pulling out of California too. And I saw a TikTok video, and this woman said that she's an underwriter for State Farm, and she said that insurance policies used to be $4,000 a year. Now they did not cancel existing customers, but they're not taking on any new customer, and it went up by $21,000. So it was $4,000 a year before, and now it's $25,000. So if your homeowner's insurance goes up by $20,000, or this other guy by $12,000, it went up, I couldn't do it. And me and my wife Allison, we make pretty good money, but we could not afford a $12,000 increase in insurance just because State Farm needs to make more money. And so what does that have to do with the housing market? Well, every time homeowners or anything else like that goes up, that means that you have less buying power. So every time an insurance company goes up in price or comes up with a new policy that needs to be higher, and you need to shop for that price, you will now not qualify for a bigger house. It basically nibbles at your monthly payment. So when your monthly payment's going to be high, let's say your monthly payment's going to be $2,000 in just principal, and what is it? Just the principal and TPI or whatever it's called. That is $2,000, and now you tack on $1,000 in insurance and maybe some HOA fees. All of a sudden, you're looking at $3,500 a month with property taxes. that is not doable for most people. It is not, because that hurts. And then you're looking at $1,000 new car payment, so you're already at $4,000, and you haven't even touched any living expenses. So you haven't bought any groceries, you haven't enjoyed life yet, you just basically paid bills. And then let's talk about what happens when you spend that kind of money and you have a medical crisis and you need to pay medical bills. Where are you going to take that money from? Because everything is going up like crazy, but your wages are not. And now on top of that, we have people getting unemployment again because they need to, because they're getting laid off. So now, what do you do? What would I do? Well, if it's unaffordable, you got to move to a state that is affordable. And I know there's pros and cons to everything. So because it's funny, because we lived in California and I lived in Florida, and we thought about buying back in Florida before I bought in beautiful Las Vegas. But you got to make sure that now, when you're planning a family, where is it that you cannot, let me rephrase that. You need to make sure that you can not move to a place where there's natural disasters that will bankrupt insurance companies, because if insurance companies pull out and you can't get insurance on it, that means that you will not qualify for a mortgage. So what does that mean? That means you got to pay cash. And do you want to pay cash for an asset that the storm might wipe out? Seems like a no-brainer to me. That's why you need car insurance. So if something happens to your car, it gets stolen, it will get replaced. And so if you're gonna spend a few $100,000 on a house because you like the beaches, you like golfing, you like all that kind of stuff, but a natural disaster happens and you get wiped out and you lose your house, what is horrible, but it happens. And look at Fort Myers, how it happened. And then all of a sudden, you're like, oh my gosh, now you have to pay cash for it because you couldn't afford insurance. So now, what do? Well, you have a property that you either need to take out a mortgage again to rebuild it, but now it's going to be even more expensive because during disasters, as you saw in Cape Coral, and I actually lived in Cape Coral, Florida, that was right where the hurricane hit, everything went up. There were more fraud. Everything costed way, way, way more. And my neighbor said they moved the flood line. So it wasn't the property that was under flood, but since the hurricane, they rezoned it and they made it a flood zone. So all of a sudden, his went up from I think he paid $2,400. It's $6,500. And when you're retired and you don't have the money, you can't afford it. You cannot afford increases like that. And even when you're working, it's easier to offset that when you're working. But man, it's hard. It is tough. Taking up something like that is really, really, really hard, because most people do not make that much more a month to just keep up insurance. That's why, even though insurance should be mandatory, people don't have it. And I feel like when we're talking about, the housing market's going to collapse, yeah, with stuff like this on the horizon, where insurance goes up, property taxes go up, everything goes up, then interest rates go up too. So then, yeah, something has to come down. And most likely it's the price, because when you're going to buy, let's take my house for an example. If you buy a $900,000 house, maybe $1 million, let's take that. If you buy $1 million house and all of a sudden your costs explode to maintain that house with insurance, with property taxes, with everything else, that means that people do not have that money to spend on it. So you got to come up with new ways of either making more money or with new ways of you trying to come up with new ways of, yeah, these dogs are crazy. These dogs are just barking like crazy. And Rexy is all freaked out. But that's an aggressive dog too, holy shit. But yeah, I should probably walk with a taser, because if a dog jumps over, that guy's gonna get zapped. So
Hopefully they have insurance.
yeah, hopefully they have insurance, because I'm sure as hell gonna sue them. So another thing is that when everything is so unaffordable and prices are still sky high, because I think Las Vegas, according to Redfin, only went down like 8-9% or something, house prices. Well, it's completely fine with me because interest rates doubled. It's just insane when you really think about it. So what would I do? That's what I made the video. Well, I would probably move my family out of the state of Florida, because even though you like the beaches, if you can't afford where you live, you gotta move. Would you? Got Allison right here. Would you move if you can't afford to live where you're at?
Well,
Or would you?
Can you put insurance on a credit card?
I don't think that you can put homeowners insurance on a credit card.
Could you take out a personal loan to pay insurance?
Yeah, but you got to pay it back.
I guess you could sell and rent.
Yeah, but that's expensive too. So.
Well, it might be cheaper than moving.
So you would actually sell your primary residence.
If I loved Florida, or if I had kids in school, or if my parents lived there, or you know.
So she would actually sell her house.
Well, no, I'm just saying that's another option. I would not live in Florida, because it's Florida, but.
Yeah, so the question is, what would I do if I was in these people's shoes? I would probably move. I would probably move to a state where I can actually make more money and be affordable, and have it affordable. So I would kind of find a place like Las Vegas, where you have a bunch of people from California moving and trying to get a remote job, or even go a little bit more inland and find where you can actually live cheaper than you are right now. That is an interesting combination that is brewing on the horizon, where we do not know where this is going to go with all this crazy expensive stuff happening. So I will see you in the next video.